Good afternoon, ladies and gentlemen. My name is Marcin Lauer. I represent the investor relations team of Tauron Polska Energia and have the pleasure to welcome you during the video conference for investors and analysts on Q1 earnings of Q1 2017 earnings. It's a little bit different than usual from the International Congress Center in Katowice, where since yesterday we've been having the European Economic Congress. At the same time, European Startup Days are also taking place, and we are a partner of this event. The Q1 events highlights will be presented by the CEO, Mr. Filip Grzegorczyk, and Marek Wadowski, the CFO. And we also have with us Mr. Roland Makieła, the Executive Director for Controlling Affairs, and Mr. Dariusz Niemiec, the Managing Director for Trade Operations. Let me remind you that as always, we are conducting the presentation in Polish and with simultaneous interpreting into English. Outside of the broadcast, you can listen to our meeting via the call conference. Thank you very much, ladies and gentlemen. Today we have a pleasure to present to you the Q1 2017 earnings for our company. These earnings, in our opinion, as well as according to the market opinions, are exceptionally good earnings. First of all, it's worth emphasizing that the adjusted earnings, adjusted from one-offs, are about 10% higher than the average of analysts publishing the research on Tauron. So let's move on to the financial and operating results for Q1 2017. First of all, you need to indicate that the group generated stable revenue from sales of 4,600 million. The reported EBITDA for Q1 2017 reached almost 1.2 billion PLN, which is 36% up year on year. Here, it's worth emphasizing when this earning was contributed in a positive manner by the dissolving of 190 million PLN provision, which was related to the CCGD unit construction in Stalowa Wola at CHP Stalowa Wola. But even if we adjust the EBITDA and exclude this one-off event, the EBITDA would have reached almost 1 billion PLN, which gives us an almost 14% increase versus Q1 2016. Net profit reached 640 million PLN, which means an almost doubling year on year. The net profit was positively impacted, first of all, by the positive exchange rate differences, which were due to our debt denominated in euro. In Q1 2017, we allocated 636 million PLN as CAPEX, which is a value comparable to last year's CAPEX. With respect to the key net debt to EBITDA ratio, this ratio year on year went down 0.2. The decline of net debt to EBITDA ratio versus Q1 2016 was due to the issue of 190 million euro hybrid bonds issue. This issue had a very positive impact upon the financial stability of the group, because the proceeds from these are excluded from the calculation of a net debt to EBITDA ratio. If we compare the net debt to EBITDA ratio versus the net debt to EBITDA ratio at the end of last year, it's practically flat, 2.3. In this case, the stabilization of the ratio is due to the strong growth of EBITDA in Q1 this year. The details on the debt and financing will be coming further on during this conference call by CFO Mr. Wadowski. Moving on to the operating data per segment. First of all, in the mining segment, we posted a 25% commercial coal production versus Q1 2016. And I think here, short comment, namely, if we were to compare the extraction volume of Q1 2017 versus Q4 2016, then definitely we see a significant drop. But one should emphasize that this decline was planned by us, and this is due to the schedule carried out in Q1, the process of preparing the coal faces for excavation in our coal mines, including the Brzeszcze coal mine. In view of the above, one should expect that starting from Q2, the volumes of commercial coal production, the earnings of the entire segment, mining segment, will be going up. Moving on to the electricity generation segment, we generated a 14%, a high increase of electricity generation volume, and a 9% increase of heat generation volume. The electricity generation volume went up due to the adopted commercial strategy, trading strategy for 27, and the higher demand for electricity, whereas the higher heat production was due to the relatively long and cold winter. Moving on to the distribution, I should mention that in Q1 2017, we posted a very high 4% growth rate of electricity distribution volume. This is the consequence of the good economic conditions. As you know very well, distribution contributes about 70% of the group's entire EBITDA. Therefore, the increasing volumes in this segment, in this line of business, have a direct impact upon the entire group's financial earnings and its financial stability. And finally, what we find makes us very happy, the solid restoration of electricity supply volumes. As we announced when we were presenting the full year 2016 earnings, in 2017 we intend to significantly increase the electricity supply volume, and the results for Q1, both on the operating side and the financial results, demonstrate that the management board is effective in this respect and is delivering on its promises. Highlights summary: as a majority of the events that are presented on the slide were presented to you during the previous conference call, let me draw your attention to 3 selected events that took place during this period. First of all, the coming into force of the agreement and amendment to the gas supply and the power takeoff agreements by the combined heat and power plant Stalowa Wola. This was a consequence of a repayment of a debt to the banks that provided financing for the power generation unit construction Stalowa Wola. Currently, are working on obtaining new, on more favorable terms, financing for this project. A second important event was our activities in the innovations area. The consequence of these activities was the letter of intent signed with the Azoty Group, and this letter of intent is related to the work on the coal gasification project. The rules of our participation in this project will be defined in separate agreements later on. Today we know that the estimated value of this investment project is between 400 and 600 million euro, depending on the selected technology version. The entire concept assumes the use in this project of the coal extracted by our coal mines. And finally, we have a pleasure to mention that TAURON was awarded the title of a Transparent Company of 2016, Transparent Company of the Year, which we understand to mean that our stakeholders appreciate the transparency of our business operation, the quality of the market communications. Moving on to the details, let me ask the CFO now. In Q1 2017, we were dealing with favorable macroeconomic conditions, quite a decent GDP growth rate was posted by Polish economy, as well as the increase of industrial production sold growth rate, which had an implication on an increase of electricity consumption. Let me remind you, in the sales of electricity, it was 2.7% increase. Additionally, the increase of electricity consumption in Poland was caused by the relatively cold winter and the fact that, especially in the SME segment, small and medium enterprises, electricity distribution volume went up. With respect to pricing on the electricity market, we do not see major changes. The situation is relatively stable. The prices in 2017, in Q1 2017, were close to the levels achieved in 2016. And here, looking also forward, 2018, we also do not see any major price changes. This is important for our, especially generation segment. The structure of electricity production is similar as in Q1 2016. Still, the dominating fuel is coal, but systematically, quarter after quarter, we are observing increase of electricity volume generated from renewable sources, which has an important impact upon the prices evolution on the market, as well as the generation process in our generation segment. Key financial data for Q1, it is worth noting that EBITDA, even adjusted, excluding the one-off events such as the dissolving of a provision related to the CHP Stella Wola in the amount of 190 million PLN, goes up to almost 1 billion PLN, up 14% year-on-year. Sales revenue in Q1 2017 were comparable, were flat versus last year. Also, the structure of the revenue did not change much. Net profit attributable to the parent company's shareholders is 640 million PLN. Moving on, key segments results. We can see that our most important segment from the EBITDA point of view is the distribution segment, more than 600 million PLN in Q1 2017. Important segments are also supply and generation. However, the supply segment earnings are a bit distorted due to a one-off, namely the excluding the dissolving of a 190 million PLN provision. The mining segment improved its earnings versus last year, but still it's generating negative EBITDA. However, we maintain our opinion that the EBITDA level in the mining segment should be positive for the entire 2017, with a disclaimer, with a reservation that there will be no unexpected developments or geological or mining problems in subsequent quarters of this year. Summarizing the main factors that impacted the EBITDA in Q1 2017, primarily the supply segments factor, which is the dissolving of a provision related to the CHP Stella Wola, increase of distribution segments earnings, and the increase of generation segments earnings. Moving on to individual segments, in the mining segment in Q1, a very important development that impacted the improvement of EBITDA was the increase of quantity of coal produced and sold. Let me remind you that Q1 2016 was a relatively difficult quarter. We were at the very beginning of the takeover process of the Brzeszcze coal mine, and this coal mine in 2016 Q1 had problems with its extraction processes. This year should be better for this segment, but still a significant cost discipline is required and production discipline is required that would allow us to achieve production output that would lead to generating a positive EBITDA in the mining segment. Let me also draw attention to the fact that the cost of producing coal in Q1 2017 had a bit of a negative impact upon the EBITDA generated, but it was due first of all to a larger volume of preparatory works by 1.2 kilometer length of coal faces. The generation segment is generated practically the same EBITDA in Q1 2017 versus last year. The important events that impacted the earnings of the segment were, first of all, the CO2 costs, namely the utilization of the free allocations of CO2 emission allowances shifted from 2016 in the quantity of 1,700,000 tons. It was a one-off, which will not have an impact upon the earnings in the subsequent quarters. Margin on electricity is having a slightly negative impact upon EBITDA, but this is due, first of all, to the fact that the prices that Tauron Generation achieved on the market in 2016 were relatively high. Although looking at the entire market, the prices were very similar as year to year, but the specific contracts concluded by Tauron Generation segment enable achieving a bit higher prices. In 2016, 2017, it was not possible anymore. Therefore, this is the main reason for the difference in the margin. In the distribution segment, the main factor that impacted the earnings was the distributed electricity volume went up for increase of 4.5% is a very good result. The main factor that contributed to the increase of electricity distributed volume is the volume of electricity distributed to SMEs. We've been observing systematically over the recent quarters an increase. This is a very favorable symptom, and this is primarily due to the increase of the GDP growth rate on the territory that our distribution grid is serving. The other factors had a smaller impact. The net grid losses costs are influencing positively to EBITDA is due to the fact that due to the structure of electricity distributed, because the biggest increase of electricity distribution volume was in the grids that serve SMEs, and here we have a grid losses factor lower than in case of the other parts of our grid. In comparison to the presentations for the previous quarters, we did an additional slide related to the distribution that shows the key parameters that are important for this segment. It's worth noting two elements, SAIDI and SAIFI indicators that starting from last year we've been intensely monitoring and comparing to the goal target values, benchmarks set by the President of the Energy Regulatory Office. In 2016, we were within the targets set by the President of the Energy Regulatory Office, but in 2017, we can see it clearly that this poses bigger challenges in this area. We cannot exclude the fact that if there are adverse weather conditions further on in 2017, we cannot exclude the situation where we will not comply with these targets, and we may face financial consequences that we are not able to estimate today due to the fact that the very important element that impacts the fulfilling compliance with this target is the weather conditions that cannot be foreseen. It is due to the fact, first of all, that the major portion of our grid is an overhead grid, and this overhead lines are sensitive to weather conditions, extreme weather conditions such as winds or precipitation. With respect to the targets for 2020, we can see that it's a very difficult target to comply with, to achieve, and we are preparing for that. Our CapEx in distribution segment envisages that we'll continue improving these indicators systematically. It may turn out, however, when the target for 2020 without a substantial increase of the CapEx will be impossible to comply with. And here we can also expect financial consequences if the Energy Regulatory Office's policy in this respect does not change. In the supply segment, we were dealing, first of all, as mentioned before, with one-off events, namely the dissolving of CHP Stalowa Wola related provision, which was the main factor impacting the earnings of this segment. The second equally important factor is the price of property rights in Q1 2017. This price was relatively low and lower than last year. Therefore, we generated a positive effect. Depending upon the market, it may turn out the price will be higher in the subsequent quarters this year, and this effect will not be recurring in the following quarters. With respect to electricity supply, we're also dealing, on one hand, with the declining prices. I'm talking mainly about the G tariff, which in our case went down 5% year on year. But on the other hand, increased rising volume of electricity supplied, and this rising volume enabled us to compensate the price declines. Debt and financing, as we presented to you during the previous earnings conferences, the key period for us is the 2019-2020 timeframe, where we have maturity falling for substantial portion of the bonds that we issued. We are analyzing market opportunities, so we are examining whether it would be more favorable for us to draw a different type of financing or diversification of this financing, and we are working on trying to make the repayment via bonds more evenly spread over the years. But no final decisions have been made. Once we make such a decision, we will inform you of that. Debt as of the end of March is slightly more than 8 billion PLN. The financing available to Tauron is almost 3.5 billion PLN. So the spending that will be the expenditure, the capex that will be incurring in the near future, this capex has financing fully secured. When we're talking about the capex, let me hand over back to the CEO. Thank you very much, ladies and gentlemen. With respect to the key project work progress, of course, the key project, the most important one, is the 910 megawatt unit in Jaworzno. End of Q1, we have a work progress at the level of 33%, and therefore we can confirm the scheduled completion deadline for this date for this project as November 2019. The second important investment project is the CCGT unit Estrela Wola. The work progress is 85%. As you know very well, the project has been inventoried. Now it will be continued along with PGNiG, Polish Oil and Gas Company, and the planned completion date is also 2019. Investment works are also conducted in the mining sector, mainly the construction of 800-meter level at Janina coal mine, construction of Grzegorz Shaft at Sobieski coal mine, and the implementation of a capex program at Brzeszcze coal mine. With respect to the capex per segment, we have two major items. The first item being the distribution segment, of course, 262 million PLN. First of all, we are talking about upgrading of grid assets and construction of new connections. And the second important capex segment is generation, 335 million PLN, but it must be emphasized that 80% of this capex is due to the Jaworzno power generation unit construction project. This last important topic that we'd like to draw attention to is the efficiency improvement program. As you know very well, as part of a strategy adopted by Tauron, this is the third efficiency improvement program. This program assumes the obtaining of a total savings in 2016-2018 timeframe at the level of 1.3 billion PLN. As of the beginning of from the beginning of 2016, we managed to already realize savings of 626 million PLN, which constitutes 48% of the total planned savings under this program. The highest savings were generated in the generation and distribution segments. Ladies and gentlemen, I think this is where we'd like to finish the presentation of the group's earnings and the most important highlights of Q1 2017. And of course, we'd like to ask you to ask questions. Thank you very much to the management board for the presentation. I'd like to extend an invitation to ask questions both to you present here in this room as well as persons following our presentation remotely. So far, we have a question from Mr. Kamil Hajdarowicz from BNP Paribas Bank. What will be the impact of debt level? What will be the impact of a debt level on the debt level of joint gas co-gasification project jointly to be performed with Azoty. Answering this question, I can answer that it will not have any impact. First of all, this project is at an initial stage. Initially now, that today no mention is available, no data is available on financial obligations. We are sticking to our strategy that says that until 2020, Tauron will not be entering new investment projects. Just to supplement the answer given by the CEO, let me remind you that in the market filing that we published on this topic, it was emphasized that any obligations will be described and defined in separate agreements. Mr. Stempin from Angus Media, what are your plans currently with respect to the aging 200 megawatt units? Are there any decisions yet in place which will be upgraded, which of them will be upgraded, which will be decommissioned, and when will that happen? I understand that Mr. Director Niemiec will answer this question. With respect to the Tauron generation fleet, it has to be reviewed in the context of a recent vote on the BAT conclusions that approved the more stringent emission standards that it seems to us will come into force as of the end of 2021, because since the publication of these conclusions will take place around September. The 27th of April was the date when practically the BAT conclusions were approved. Generally speaking, we, of course, were reviewing our generation fleet with respect to those emission standards that were originally included in the draft and in the final document of the BAT conclusions. And generally, each generation unit has been inventoried with respect to this issue. The scale of potential upgrades for the 200 megawatt units, I may say, is between 35 and 75 million PLN, whereas, of course, everything will depend on the capacity market that we do hope will come into force in 2021, generating specific financial implications, will come to light, come to fruition, will be implemented. This is the main precondition. So having, first of all, the funds for this type of upgrades on such a large scale. Thank you very much. Ladies and gentlemen, due to the fact that I have not received any other questions, I'd like to thank you very much for accepting our invitation. I'd like to extend an invitation to you today already for the conference call when we'll be presenting the first half of 2017 year presentation, which will take place on the 19th of August. And please stay in touch daily with our investor relations team. Our speakers will still be at your service for a few more minutes after the meeting. Thank you very much, and see you next time. Thank you.